Time for the Disruptors. George Tsilis with us every single day. Senior markets correspondent here on Schwab Network, taking a look at today's disruptor, Block. So the company seeing a rally, reported its numbers. In fact, I see it up 16% right now. Tell us about the latest quarter. What stood out to you?
Yeah, well, I think, if you look at Block, Nicole, and even PayPal, there's been a significant divergence between the two companies. And I think there's a reason why. If you look at Block's Cash App, of course, we know that that's becoming a very prominent, useful item from a consumer payment standpoint. But also, Block has moved away, which still has, though, their traditional merchant payment solutions business. But they've been moving also to small business accounting, payroll processing, inventory management. The other thing is the Bitcoin elements to its business, which are also one of the reasons why they actually produced some nice returns over the last year. And, of course, their guidance, which was revised higher based upon increases not only on their core business, but in their subscriptions. If you look at the total sales, which beat the estimates just slightly at $5.77 billion, higher by 24%, they actually missed on the adjusted earnings, but they still increased by 110% at 45 cents compared to 22 cents last year. The total revenues of 24%, subscription services across all their platform products were higher by about 27%. So it gives you an idea that they're starting to economize on better margin profile. They also talked about, looking at focusing more at growth in the United States because that's where a lot of competition is. And of course, they're also looking at cost retention strategies, in other words, to mitigate cost expenses. You also looked a little bit deeply, too. What was interesting is, and I think this is one of the reasons why also the stock is up nicely today, they talked about how excluding Bitcoin transactions, because we know Bitcoin is rather volatile, sales were higher by 15%. And that's actually about 3% higher than their 5-year average. And that, again, includes the portion of their business over time that didn't have a lot of the Bitcoin involvement. So I think that's compelling. And lastly, if you look at the analysts, a lot of them are still moving their targets higher. If you look at RBC, they've got an outperform rating, $88, and across the board, Wells has got a $95 target, Truist $100. Both of them have buy or outperform ratings. One of the things I did notice is prior to the release of earnings yesterday, the estimated earnings per share for 2024 was about $3.03. That's now higher to $3.14. So that's about a 10% increase in adjusted earnings for 2024. And even in 2025, the number is over $4 a share. So the trajectory of earnings for Block are increasing substantially. In next year, it's about 47% EBITDA growth compared to last year. But the stock is only trading around 21 times forward earnings. So the price relative to earnings growth is cheap. And I think that's why the stock is up nicely today, and also why these analysts are moving their targets higher, respectively, by in some cases 25%.
That's a big move, right? When they start to raise those, but as you noted, maybe it was underpriced, and look at this big move. So at this point now, how would you go about an example trade today?
So, looking at the chart, Nicole, in the last, few years, especially in the last 2 years, effectively, Block has been in a trading range. It's been between 50 and 80. Now, today, it did peak above that $80 area. I think it traded around 82.30. But I think the numbers that were reported today and the guidance revision and higher estimates may end up pushing it over time between now and the next earnings announcement past that $80 point. So what we're going to do is we're going to go out and put on a bull call vertical. We're going to go out to April with about 56 days to expiration and buy the $80 call option, and then simultaneously sell the $85 call option. So altogether, you pay or outlay about $2 a share or $200 a contract in debit. So that's your maximum risk. So the stock essentially has to hit $82 if you hold it through to expiration. So $2 is that risk, but you do potentially have the capability of making $3 of return if the stock hits 85 or higher by expiration in 56 days. And keep in mind, it did. If it wasn't during the regular trading hours, at least in the pre-market, it did hit over $82.
That's always fun to watch the pre-market, and then really see where things run. Thank you so much, George Tsilis. Great week of disruptors.
Okay, Nicole.
Thank you, George.